There was a man who invested $1 every single day. Not 100, not 10, just one single dollar. For the first 5 years, nothing remarkable happened. His friends laughed. They said, "Bro, at this rate you'll retire when you're 200. But then, something strange began to happen. Around year 10, his money wasn't just growing, it was exploding. The curve turned upward like a rocket. And by year 25, that single dollar habit turned into a fortune worth over $150,000. Everyone's heard it. Compounding is the eighth wonder of the world. But let's be honest. If it's that powerful, why do most people still feel broke after saving for years? Why does it feel like compounding only works for the rich, while the rest are stuck waiting for results that never show up? So today, let's uncover the hidden layers of compounding no one ever talks about. The psychological, emotional, and strategic side that separates the financially frustrated from the financially free. Watch all the points which I'm going to discuss. It will flip how you see compounding. If you're passionate about success and ready to take action, hit that subscribe button. We're here to inspire and guide you every step of the way. Let's dive in. Number 1. Compounding doesn't start with money. It starts with consistency. Most people think compounding begins when you start investing. Wrong. It begins when you start showing up. You see, compounding is a reflection of habit, not just numbers. You can't compound 1,000 if you can't stick to saving 10. The first stage isn't multiplication, it's discipline. That's why the initial phase feels boring and invisible. Here's the catch. The invisible part is the most powerful. Imagine watering a seed every day for months with no sprout in sight. Most people quit there, but those who continue see exponential growth later. That's compounding in disguise, disguised as repetition. Start with micro-consistency. Read 5 pages daily. Invest $20 weekly. Learn one financial term a day. Dividend yield, index fund, cash flow. Over time, the effort compounds into mastery. Compounding doesn't reward the one who starts fast. It rewards the one who doesn't stop. Every skipped day resets your curve. So before chasing higher returns, master boring consistency. That's where the curve truly begins. Number 2. The silent delay that tests everyone. There's a brutal law about compounding. It works best after it's least rewarding. At the beginning, your portfolio barely grows. You save, invest, and watch the graph move like a snail. That's the flat zone. This zone kills dreams because most people expect quick fireworks. Take a new investor who puts $100 monthly into an ETF. After a year, not much happens. 2 years later, still small. But around the 7th year, the same growth curve suddenly bends upward. It's not magic. It's math meeting momentum. The trick? Endure the flat zone. Most never do. They stop before the curve kicks in. Compounding punishes the impatient by making them start over again and again. Here's the mindset shift. Your job is not to chase results. Your job is to survive boredom. If you can outlast boredom, you'll out-earn 90% of people. Number 3. Compounding magnifies everything, including your mistakes. Here's the scary side. Compounding doesn't just multiply gains, it multiplies habits. Bad ones too. If you procrastinate today, that compounds. If you spend impulsively, that compounds. Every small leak grows into a flood over years. That's why financial freedom is never just about money. It's about who you become daily. Think of debt. A $5,000 credit card balance at 22% interest doesn't double overnight, but in a few years, it quietly balloons while you plan to fix it later. The same principle that builds wealth also builds financial traps. So instead of only asking, "What's my return rate?" ask, "What am I compounding daily? Growth or decay?" Small corrections early save you massive pain later. If you don't intentionally direct compounding, it'll still work, just against you. Number 4. Compounding feeds on boredom, not excitement. The irony? Compounding thrives in stillness. The market moves, the news shouts, but the smart investor stays silent. They know the real growth doesn't come from doing more. It comes from interfering less. Every time you chase quick returns or hot stocks, you break the compounding cycle. The top 1% of investors win not because they're smarter, but because they're calmer. Let your investments breathe. Reinvest dividends instead of withdrawing. Ignore short-term drama. Compounding is like baking. Open the oven too soon and you ruin the cake. If you can resist constant tweaking, Your wealth will quietly compound while others chase noise. The hidden skill is learning to do nothing. Number 5. The emotional tax nobody calculates. Here's what financial textbooks never mention. The biggest enemy of compounding is not inflation or market volatility. It's emotional volatility. When you panic sell in a bear market, you don't lose money. You lose time. Time that your investment needed to grow. Every emotional decision resets the clock of compounding. Smart investors build emotional systems, automatic contributions, fixed schedules, diversified portfolios, so their feelings can't interfere. It's not just about having money in your account. It's about having peace in your mind. Emotional control is compound protection. That's why calmness compounds wealth faster than intelligence. You don't need a 150 IQ. You need a 10-year calm period. Number 6. Compounding rewards the invisible work. There's a stage every successful person passes through, a silent, unseen phase that no one claps for. This is where compounding quietly does its work. You see, before anything multiplies, whether it's wealth, skill, or influence, it looks like nothing is happening. That's because compounding grows in the dark. The first year of saving feels useless. The first few videos on a YouTube channel barely get views. The first attempts at understanding stocks or mutual funds might feel confusing. But underneath that apparent stillness, something massive is building: momentum. There's a story of a bamboo tree that stays underground for 4 years, invisible, unnoticeable. But in the 5th year, it shoots up nearly 80 feet in just weeks. Did it grow in weeks? No. It was growing all along, just below the surface. Your journey works the same way. Whether you're building your investment portfolio or growing your business, the invisible work you're doing now, those consistent $50 ETF contributions, the habit of reading market reports, the small upgrades in your mindset, they're all compounding beneath the surface. Keep watering your bamboo. It's growing roots for your financial forest. Number 7. The rule of reinvestment. Most ignore. Reinvestment is the master key that unlocks exponential compounding. Yet, ironically, most people sabotage it without realizing it. The logic is simple. Compounding doesn't accelerate by earning more. It accelerates by reinvesting what you earn. Whether it's dividends from your stock portfolio, profits from your side hustle, or even knowledge you've gained, the more you reinvest, the faster the wheel spins. But here's the real-world trap. People cash out too early. They receive their first dividend check, maybe $100, and instantly spend it on something they don't need. They sell their mutual fund units because the market dipped 2%, or they quit learning because they already know enough. That's where the compounding curve breaks, because every dollar or idea reinvested doesn't just add, it multiplies. Reinvesting isn't just about finance, it's about mindset. When you reinvest your time, your earnings, and your lessons, you're proving that you trust the process more than the payoff. And that's when the magic happens. Number 8. Compounding your learning, the wealth multiplier. No one counts. Everyone loves financial compounding, but few realize the strongest form of it happens inside your mind. Every bit of knowledge you gain compounds like capital. Read 1 book, and you're slightly smarter. Read 10, and you start connecting dots. Read 100, and you begin predicting moves others can't even see coming. That's intellectual compounding, and it's the secret engine behind every investor, entrepreneur, and innovator who wins big. Financial success always follows mental growth. The more you understand the stock market, risk management, portfolio diversification, or cash flow, the less you rely on luck. You start seeing patterns, not randomness. You stop reacting and start anticipating. Here's the beauty. You don't need a degree or fancy course. Even 15 minutes daily can transform your trajectory. Here's a question. What's compounding faster, your money or your understanding? Because the latter decides the former. Remember this, wealth flows to the informed. Every bit of knowledge you compound shortens the distance between your efforts and your freedom. If you'd like the video support the channel, leave a like and subscribe. It takes less than a second and helps the channel a lot. Share this video who really need this information. We have plenty of inspiring content coming your way. See you in the next one.